Fortunately, people such as Alicia and you can learn a process for facing these key personal financial questions. You can use a step-by-step process as you develop each component of your financial plan. Indeed, you can use it whenever you face difficult choices about finances. Decision-making is the process of making choices by identifying a decision, gathering information, and assessing alternative resolutions. Using a step-by-step decision-making process can help you make more careful, thoughtful decisions by organizing relevant information and defining alternatives. This approach increases the chances that you will choose the most satisfying alternative. You're not always going to make the correct guess, but it'll help you out. You've been told several times that planning can help you achieve your goals. We're going to go through the steps for planning. Step number 1 is to establish your financial goals. And again, this is going to be a longer step than the rest of them because this is a basis of our financial goals. You're going to ask yourself, what are your goals? What do you want to accomplish in the future? Needless to say, you cannot reach your goal if you do not know what it is. Establishing clear goals is essential to any successful plan, whether it's monetary or whether you're going to spend money on it or whether it's just a personal goal that you want to achieve. Understand that there are many types of goals and you have more than one. For example, you may have a goal of making a particular purchase and getting out of debt. Like Alicia, you may want to move into your own apartment or get a college education. How about a car? Maybe you'd like to pay off debt or finish college debt-free. You may want to start your own plumbing business or catering company. Maybe you'd like to have $200,000 in total wealth by the time you are 40 years old. Or you might be interested in helping a charity buy a new facility. You categorize your financial goals in terms of when you hope to accomplish them. We talked about this a little bit before, and we're going to tighten these up a little bit. So our short-term goals are those you plan to accomplish within the next year. And we have lots of short-term goals. You could probably come up with some of your own short-term goals. Intermediate-term goals are those you want to achieve in the next 1 to 5 years. It could be, for example, like graduating from high school. Maybe you want to save up $5,000 within the next 5 years. Long-term goals will take more than 5 years to accomplish. We kind of talked about the 10-year plan after that. But for example, for you, it might be maybe within 5 or 6 years, you want to be able to save a certain dollar amount so you can make a down payment on a house, or save a certain dollar amount so that you don't have to worry about money so much in college. Maybe it is in about 10 years getting married and starting a family. We all have our own personal goals that we want to accomplish. What would Alicia's goals be? Going back to Alicia wanting to move out. Her short-term goals could be buying a new cell phone, maybe increasing her income by $80 a week, so maybe she can afford a few more things, save money for a deposit on rent and utilities, save $1,200 this year for college. Those could be some of her short-term goals. Complete high school senior year with a 3.0 GPA. Again, we're talking about Alicia's goals. Intermediate goals could be like graduate from college, buy a better vehicle next year, accumulate money in the next 5 years. Some long-term goals, accumulate maybe a little bit more for a down payment on a house, earn a graduate degree, accumulate savings by the time she's 40 or whatever. It's essential that you set realistic, achievable goals. It doesn't do any good to set a goal if you can never reach it. If you focus on unrealistic goals, you'll likely become discouraged when you don't achieve them. On the other hand, establishing an achievable goal encourages you when you accomplish it, as you see that you are making progress towards that goal. For example, what if Alicia wanted to save $1,200 a year for her college education? If she is successful in the first 3 months and have accumulated $300, she'll feel encouraged to continue saving. If she said she wanted to save $12,000 a year for her college education, she would probably be disappointed by the end of the 3 months and probably abandon her goal. Remember that you will set a number of goals for your financial life. In particular, you'll want to set goals for each component of your financial plan. One method to help you set goals is the SMART method. It's being specific, measurable, achievable, realistic, and time-related. SMART is an acronym that stands for specific, measurable, achievable, realistic, and time-related. Let's take a look at each of these qualities in more detail. A goal should be very specific and have a definite target. For example, one component of the SMART goal may be to save $1,000. The dollar amount is very specific and measurable. We can easily determine when we have reached the goal. Is the goal achievable? In this case, it depends on several factors, including our income and the time frame involved. If we currently have a monthly income of $2,000 and our stated goal is to save $1,000 by the end of the year, the goal becomes a SMART goal. So if we take a look at that, if you're being specific, you clearly define your goals. Be sure that you clearly specify the goal and write why you want to achieve this goal. For example, if you say you want to save money, you have to determine how much you want to save and by when. Measurable. Is your goal measurable? Will you know when you have reached it? For example, if you want to purchase a used car, you have researched what car you want to buy and how much it will cost. Achievable. In your allotted time, can this goal be achieved? What do you need to do to make sure your goal is achieved? For example, if you want to get a scholarship for college, are you focusing on your studies and grades to make sure that you are eligible for a scholarship? Realistic. Is the goal realistic for the time you have to devote to it? Are there any known barriers to achieving this goal? For example, if you plan on saving money, do you have a way to earn that money? Time-stamped. If you have a time when the goal is to be achieved, you are more likely to accomplish a goal. For example, if you say you're going to clean your room, but do not set a time for it to be accomplished, cleaning your room becomes a goal that could be completed when all the other events take place. For a SMART goal, you need to identify a time when the goal will be completed. So again, here's a list of all of your specific items in SMART goals. Now you're going to go to your notes pages, and you will see on your own it says, explain 2 of your personal goals for each of the categories. So keep in mind it says explain, okay? You're not going to say, like, for example, make money, different things like that. So you need to explain in a little detail your short-term, intermediate, and long-term goals. Then you are going to go to the next page and it says choose an intermediate goal. So you're going to choose one that you have right in there and describe in detail what your plans are when you go through each of these. Being specific, clearly define your goal. Is it measurable? Explain that one. In your allotted time, can this goal be achieved? Is it realistic? Is it realistic for the time that you have devoted to it? And timestamp, when do you want this to be achieved? Keep it in mind now, it says describe in detail.